Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Byoungseok Kim, Manager of ETF Management Division at Mirae Asset Global Investments. We're here to discuss the launch of the Mirae Asset PHLX USAI Semiconductor ETF, which focuses on the next gen of semiconductor industry. It is great to see you, Byoungseok. Welcome to Trade Talks. Congratulations on the launch of Mirae Asset PHLX USAI Semiconductor ETF. Tell us more about the concept of the ETF. What's the difference between this particular ETF and the PHLX Semiconductor ETF?
I'm thrilled to be here today to introduce our new semiconductor ETF. The Tiger Philadelphia USAI Semiconductor ETF, in short Tiger A SOX ETF, is a legacy-free semiconductor ETF in one word. Tiger A SOX focuses on the next generation semiconductor industry, driven by the rise of AI. The previous Tiger Philadelphia Semiconductor ETF, also known as SOX ETF, invests broadly into US semiconductor industry. The SOX ETF invests 30 stocks spanning the semiconductor, manufacturing, and equipment sectors. On the other hand, Tiger A SOX ETF invests a maximum of 20 stocks aligned with the AI semiconductor value chain. This value chain encompasses sectors such as fabless, IP and ADA, equipment, packaging, and foundry, while excluding IDM analog ICs and legacy process foundries such as Intel, Texas Instruments, and Global Foundries. Additionally, we've raised the cap for top holdings to 20%, reflecting the winner-takes-all dynamics prevalent in this industry. As a result, compared to stocks, Tiger A SOX ETF has increased its allocation to fabless companies such as NVIDIA and Broadcom, IP and EDA companies like Cadence, and cutting-edge foundry companies like TSMC, leaving out IDM and legacy companies.
Tell us more about your collaboration with Nasdaq. Can you share some insights from co-development?
Sure. First of all, working with the Nasdaq was an incredible experience. With innovation as our shared core value, the teams at Nasdaq and Mirae Asset were able to collaborate closely. There are two key insights we gained during co-development process. First, with the emergence of AI, semiconductor companies have become divided into growth and cyclical stocks. Series of logic IC companies, such as those producing GPUs and CPUs required for AI acceleration, have been steadily increasing. In contrast, sales of analog ICs, which is typically used in industrial and home appliances, continue to exhibit repetitive growth and decline patterns, which is characteristic of cyclical industries. Second, the introduction of fabless and foundry business models has significantly advanced the semiconductor industry. As you know, semiconductor production involves ultra-fine manufacturing process. Initially, IDMs gained prominence due to their cost efficiency through vertical integration. However, as the industry evolved, IDMs lost their competitive edge because they were required to invest in both design and manufacturing. The fabless and foundry models, which focus on either design or manufacturing rather than both, have since become the dominant trend. In 2023, fabless companies had an R&D expense ratio of 21%, compared to just 14% for IDMs, highlighting a growing technology gap that continues to widen each year.
What are your views on future demand on this new ETF in Korea?
Well, expectation for Tiger A SOX ETF's future demand is strong, and I think there can be two key reasons for this. First, SOX index has been the global benchmark for over the last 30 years. Building in this legacy, new A SOX is designed to offer investors direct access to the rapidly evolving sector. Second, the summer of AI has just begun, and the widespread adoption of AI is accelerating the AI semiconductor market. We see that AI-related expenditures by major tech companies are steadily increasing. For example, during its recent earnings call, Microsoft stated, "Our AI business is on track to become the fastest business to reach $10 billion. Google also reported an 80% increase in website traffic due to AI tools and noted that its AI recommendation algorithms have boosted YouTube ad revenue and subscription sales. More directly, TSMC stated on its Q3 earnings report that the share of AI chips for servers grown considerably. This marks only the beginning of the AI era. We anticipate Tiger Philadelphia US AI Semiconductor ETF will achieve great success as the ultimate investment vehicle in AI era.
All right, Byoungseok, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.